Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. World on fire. Good God. I can't look at this, guys. Like my strategy is, you buy it and you hope that you get the next path. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out, and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Friday, and we've got a pretty inside day set up here for us. Coming over here to the charts, we had some big movement at the beginning of the week. The huge down move that then reversed, and then what we're seeing is like overnight aggressive down movement, and then during the day a very aggressive up movement, and we've got a lot of shorts out there that kind of have to cover and funds that have to buy the treasuries essentially. So then we come into today, and I mean, come on, it doesn't get much worse than that. In terms of like being inside, it's like an inside day of an inside day of an inside day of an inside week. It's just okay. So over in the E-mini, things still going pretty okay. They're at their highs. It's far enough back that we kind of have to come back to like the daily chart to really see where we're at. And I still don't have us above. I think that's the 100-day moving average, but it's not terrible. It's not terrible. And we might see some strong. They might have a strong close to the week too. So that'd be very, very good for the equities. And we come over to oil. Oil reversing the past 2 days and coming back down to about where we started the week. Gold and silver also giving up some of their gains, but they're still higher. There does appear to be some support overall in gold and silver on a day-to-day basis. Can they make it back up above 2,000? Remains to be seen. But it wasn't a terrible week in gold and silver. Copper, kind of meandering around. So, and also we got Bitcoin. So Bitcoin, is it finally time for me to roll over here? It looks like it is. I've been waiting. I'm pretty sure that we roll over soon. There we go. Just let it. There we go. So, but we have been seeing some bullish moves in Bitcoin. They've just kind of. It's been real quiet, I must say. It's been real quiet, and this is unusually choppy, I would say, for Bitcoin. But they do appear to be moving back up into the 50K range. And we've been seeing like some big tether prints. Granted, they're kind of coming up into the area where they've failed many times before. But that's kind of just where we're at, generally speaking, from Bitcoin. And then we get the dollar. You would think that the dollar being above 98 would be bad for Bitcoin. But whatever. They Bitcoin seems to be following risk on correlations. It matches the NQ, and stocks are going up. It might change next week, but right now stocks are going up. So that's basically where we're at. So for us today, I don't know if that really sets up very good opportunities for us. I think that I will. Well, I just missed the click. I was gonna take as she goes there, but I missed it. I will hit that one. I think that overall we are more likely to move up here, but it's probably going to be a really tough trade. So, and for me personally, I don't know what I want to do. We made money yesterday. We made like $37. Not bad. But it takes the sting off of the previous 2 weeks action off significantly, but I still want to spend some more time doing some studying. So I don't know. I have to say, yesterday I was going through the next book that I wanted to read about machine learning, and I feel very much out of my depth in terms of reading the book. Like, I think that programming the machine learning stuff. So questioning yourself, yeah. Well, it's how do I put it? Well, it was kind of funny. You were talking yesterday, but like how well we did. Yeah, we did really well. Oh, that wasn't what we wanted. Oh, I have two. It's okay. I can take the third one there and try and sort it out. Um, I don't know. It's okay. So when I think back on it, I think that a large part of the problem that we've had recently is that there's just a lot of volatility in the market. And when you get a lot of volatility, you also get a lot of random moves, right? And that just makes things extremely difficult. So probably a lot of the performance that we've been seeing is largely due to the volatility, and we probably just went too ham on the when we were in the losing periods. And when I look back at it, the places where really lost, I don't think I really had very good reasons to be taking trades. So, um, and then I think that what happens is I'm a little bit more neurotic than most. So when I get to that point, it's like I just fall apart emotionally at a certain point, right? Yeah, you talk to us about, as you say, things no one else in this sphere talks about, mechanics and stuff. All you have to do is turn it into actual trading. Yeah, well, I do feel on one side, I do feel that if I was able to take on, like, if I had $10,000-$15,000 to just trade 3 contracts in the 10-year, probably could do okay with that. But I'm still gonna have it's still gonna be like big losers. That's kind of the problem. What good is it all if you don't? Well, one thing that I've thought a lot about is that I think that my skills could be very useful to an institution, you know? That's one side of it. Um I don't know. So the things that here's the things that I wanted to get into was there's really 3 key things that I've kind of been looking at. One is the machine learning. So machine learning could really help us out, right? Because machine learning could help us. There's a lot of things that we know matter, and if we can put them all as features into a machine learning model, that could make things a lot easier, right? Because we could just come in and rely on the machine model for the technical kind of stuff, you know. Um, but I digress. That the problem I'm having with machine learning right now is that the people that really know what they're talking about, they're like graduate level statistics teachers, and they express everything in math equations, and it's really hard for me to read. It's really hard for me to read these equations, and I forget what all of the different symbols mean and stuff. So I got my work cut out for me on the study there. Like, I want to go through these books and like make a cheat sheet of symbols so that I stop forgetting what they are and really go through that. So that's why I want to study that. So would that be useful to us? Yes. Is that necessary for us to be successful? Probably not, but it would probably really, really help, right? The second thing is that I want to become a qualified investor, so that I don't think that I really have the money to do it, but I would like to be qualified as a qualified investor. And hey, who knows? Maybe I can turn that around and find other opportunities for it. I also thought that I might be able to turn around and um, have my wife learn that stuff, and then that could be a viable career path for her outside of being a flight attendant, because being a flight attendant isn't a very good game right now. And then the other side is um, get a Series 3, which would allow us to do this professionally and manage other people's money if we chose to. That could also be really useful, and investigate more long-term management kinds of strategies, right? So they're all just it's kind of just coming in and saying, well, we know a lot about scalping and short-term trading and stuff, and now there's kind of like the next level up. It's like, let's fail up sort of a thing, right? I came to terms with the fact that I'll never be that a long time ago. I'm not a study buddy. I'm not a big brain. I'm not a mathematician or a programmer. I'm just a trader. Yeah. Well, I find the math extremely difficult, but I do have some traits, let's say, that give me some advantages in that manner to extent. How do you get others people to manage after getting a Series 3? That's a good question. I don't really know. I think that you get it, and I it's the pandemic is still kind of out there and stuff, but yeah, I think at some point I try and build more connections and we'll stumble across something, I hope. And that's the kind of the thinking there. Um Now, one of the things is that my wife wants to visit her parents next weekend, and she hasn't told me exactly when, because I guess the flights changed. So I don't know if it's going to be Thursday or Friday, and I don't know when we'd be coming back either. So that gives me some time to study. I could probably read the machine learning book through at least once and then kind of go back and try and do stuff. But I was reading it yesterday. Like I've read, I tell you what, that's one of the things that you're in for a ride when the first chapter of the book is the largest chapter of the book and is like a third of the book, right? Because usually what that means is that the rest of it is really, really dense and technical content. Reading through that first chapter, I was like, okay, I think I understand what's going on here. And then it would come to the questions, and I'm like, wait, what? What? They talked about that? Oh man! And there's like exercises that I thought were like supposed to be programming exercises, but the problems that they put forth are like, oh man, I have no clue. So they gave a really good one. They said, hey, it was like a trading game, and there was just two participants. One participant is the market maker, and one is supposed to be the informed trader. And then you're supposed to somehow sort out through machine learning what's the best action for the informed trader to take or whatever. I'm like, oh, this is golden stuff, right? I have no clue how with the information that you gave me in this chapter. I have no clue what you're talking about. But I supposedly once you get into the other chapters, there's like code and stuff like that. So I don't know. I don't know. There's been some other resources I've read through. Like I definitely know how to set up a machine learning network. I'm just like, I'm pretty sure that if I come in and put some features in some of the data that I can pull out of NinjaTrader and put it together in a model, then I'm not going to get something very useful. Right. So there's a lot there's years of information to learn there, and it just eats at me every day that I don't have as much time to spend on that stuff as I want, right? And so I think what really has happened this week is I kind of came to this like, well, I'm really far. I don't know if I quite have what it takes to really do this the way that I want to. What do I got to do to get to the next level? Well, let's come back and study a bit more. But then it's kind of turned into let's just like abandon everything and just only study. And that seems a little bit extreme, doesn't it? And I think that's kind of what Uzi is trying to say is like, well, you need to keep trading. Yeah. I think that, well, one of the other problems is that the day that I've chosen to take off, the Monday, we've had good moves on those and I missed out, right? So when am I going to do it? I don't know. I don't know, man. I wish that we made that the YouTube channel had 100,000 subscribers and that was my primary job. And then I could justify spending a way more time studying during the day. If you added up all your losses, so you mean like from ever? So if we just come back to so it's actually really funny. Looking at my performance is really interesting because somebody yesterday they asked that in a thread because there was a thread about people that have been trading for over 5 years and they're still not profitable. And I'm telling you, there's way more than people want to admit. And there's a lot of people that they did really well at one point and they kind of become semi local celebrities because of the good time period that they have, and then they stop performing and they just never say anything. There's a lot of that too. I think that if I was to add up everything that I had ever lost, it'd probably be somewhere around 3,000. Now I'm much more interested in terms of like where am I at today? I'm much more interested in the last year's worth or so, or rather all of the trades that I've taken on the micros. Holy fuck, yeah, I know it's not very much. But when I look at the micros, I am basically net break even. The losses that I've had in this account are 1, the big oil trade that I took, and 2, the data fees. Man, it's really to go back and look at that, and it's like, man, well, I wouldn't be too mad if not for the data fees. You know, I don't know what to do about that, but so it's not so bad. But a big but here is that every time that the markets have started to get a little bit volatile, I just kind of took a step back and like just didn't trade it, right? And what has been happening? Yeah, and all I've lost is $3,000 trading. Yeah. Well, I'm hyper risk adverse for one thing. If you were to count like every live sim trade that I've ever taken, I've just probably lost a lot more. Actually, it's probably gained now. We could look. Let's come back and see if I can show that. The thing is that every once in a while I'll do a, let's just take on like 1,000 contracts, and so that kind of doesn't really tell you a whole lot about anything, but I'm pretty sure that the number of times that I've had like amazingly good winners makes it so that if we go back as far as we can, you get pretty okay results. I think I have to go all the way back to 2017, right? Oh, actually, let's just go 2016. Let's just see if it'll let me go that far. Why? Oh, nope, it's a loss. Oh man, was it that? Okay. There was a one day where I took a $100,000 loss on a sim. Oh man, what was I doing to make that happen? Otherwise, it looks really. When you take out that one loser, when you take out that one loser, it's like, oh, look, you've made $50,000. But those $50,000 are also not very realistic, right? Oh man, I'm looking at my camera again and I'm like, doesn't look right to me. There we go. The baby bumped it. So I was a little underexposed. That's way better. Oh, that looks beautiful. You've lost that in less than a week. Well, if I was like really going all out, I could probably lose more than that in a week for sure. Like this is the thing that eats at me, man. It's not that like the overall performance is dismal. The overall performance, when you look at it, is probably in the top like 80% of traders, actually. That's not making money, but it's probably still in the top like 80% of traders, right? But what bothers me is that I will have things going so well for us, and really I think supportive, I no, I'm not going to get into that, but things are going really really well. And then I'll just have a week where it's like every trade is a loser. Like, how do you take 14 trades in a row and like never get a single tick of favorable excursion? Like, seriously. It's not random. I don't know how to sort that out. People will come in and you can look at the chart and it'll be like, oh yeah, you were going like the opposite way right as it was pivoting. Right as it was pivoting, and it's like, how? Right? And so I just know it's not that I'm scared to take the risk on, because it's not really risk for me, you know? Like, I can put a few $100s into it every month and be fine. But it's just that I know that eventually that period is going to come where I take 12 losers in a row. And I don't know how to stop that. I don't know how to. Why does that happen? What do I got to do to stop that from happening, to get around that? You have a lot of stuff on printed in manuals on indicators and market microstructure and stuff. Well, so here's the other part of it is that, like I was saying earlier, I think that a lot of the losses that I took, I didn't really have a very good reason to trade. I really should just be like short. Really, from Friday to Monday, I would have loved to have just been short, right? Could have made a ton of money. But, I won't have a piece of news or any kind of information that really makes me, that's really good enough to be taking a trade off of, essentially, is the long and short of it. But I took trades anyways, right? Because I didn't have anything. And then the thing comes out that, well, you should be able to discover these things on your own. But I don't know if I really have the data to do these sorts of things. So like the stuff that the Nomura quants come out, that, for instance, the reason why we think that it's probably better to go long in the treasuries right now, although I don't know about on a Friday, but until the end of the month, there's probably going to continue to be some spurts of buying pressure at the very least, if not some outright crazy bull trends, right? I would love to be able to do that sort of stuff on my own, but that would probably require a lot of learning and programming and data that I probably don't have, right? Yeah, I have the stomach. Well, I don't feel like I have the stomach to scalp ES anymore. With the degree of volatility that we had before the pandemic, it was okay. because then it was like make or lose $20. Now all of a sudden every day it's make or lose like $200, and because these things are going like 40 points a day. Whereas when they first started the micros, it was like the maybe 4 points was good, right? Yeah. But swinging the treasuries here, I think, is great. We're having a little bit more volatility than usual, but the degree of the losses isn't necessarily a huge deal. Nah, the degree of the losses here isn't the end of the world. It's just that it's difficult to be profitable in volatility overall because you get a lot more random market movement, right? You're long to in the treasury, or I've kind of been sitting here asking myself like if I should put a live trade in the micros, but the thing kind of holding me back on this one is that I usually do poorly on Friday. So we do have consumer confidence today, right? Yeah, in ZN. What is the time period? Because there's also some sales numbers too, right? Oh, okay. So Yellen Waller speaks at 7:10. Pending home sales. Okay. So the news is basically all at 10 o'clock. Oh, you were long yesterday. Yeah. Well, I closed it when I closed it before the amen to that. I've not done well on Friday. Yeah. I think that there are flows that come in on Friday that we don't understand, and that always tend to take me by surprise, is what I think a lot of it is. Because I've had so many situations where I really thought, oh, we got the news and we can just take this and hold it. And then it does like the exact opposite of what I think it will do. Right? That's got to be something else. That's got to be some other really strong flow that I don't know about. Maybe just repositioning before the end of the week, for all I know. The problem, it still kind of comes back to this. It's like the problem is twofold, right? The problem number one is Seth's performance is not as good as we would like. Problem number two is the YouTube channel is not as successful as I would like. I really want to get the YouTube channel to over 10,000 subscribers. We're good. We're not doing too bad. We're like to 7,500. So we're 3/4 of the way there. And it seems like only yesterday that we were at 5,000. So we have been growing, but not as fast as I would like. I really need to get it into the next level. I need to spend more time making videos. I want to spend more time doing, learning machine learning. There's things that I know I can learn. I want to do that. So how do I do those things? Well, the idea was stop streaming and just do that. I have to say on Wednesday, I felt very, very depressed and I really, really didn't want to trade anymore. And then I come back yesterday, had a winner. I was like, well, okay, but I don't know if that really changes anything. And today I'm feeling like, well, don't want to stop streaming. So I don't know what to do. I don't know, how do we optimize our time here? Like right now is kind of a good example of like, I don't know if we're really gaining a whole lot trying to trade here on a Friday. We could be writing a video. I suppose that you could help me write the video. Maybe, well, now is probably a better time than when the EME gets going. Try not streaming and trading when no one is watching. Yeah, I think we probably should do some of that too. Oh, hey, that's not too bad. Thank you. That right there is enough that well, that big stack at 26 is pretty telling, right? It might be a head fake. That might be exactly the sort of thing that gets you to FOMO into it so that it can come back on you. But that's that move is very much like the tells that we got yesterday, where it's you go long here, man. You know, U.S. NATO doing contingency planning for the possibility that Russia chooses to strike NATO territory. Hmm. Would be very nice if it broke out of this range, wouldn't it? Nope. Okay, so they ticked down, big order kind of pulled out of the way. It's been like watching paint dry. Well, now that it's kind of coming back, I'm kind of hoping that it will go all the way back down to the bottom of the range. Overnight was sloppy. What do you mean by sloppy? When I look at the chart, it was very constrained. But there was a pretty strong move up and then move back down. Yeah. I tell you, like the setup here is really interesting to watch and study. And I think that it will become even more interesting when we're done. Because here's what I think is going to happen. I think that we're going to continue to see buying pressure until the close of the month, rather. I think we're going to continue to see buying until the close of the month. So when you come in and you look at like all of the fundamentals and everything else is going around, it just screams go short, don't you think? But I think that we are coming across a flow that is incredibly crazy strong and will probably still end up going taking us up over and over and over again, right? And so that's why it becomes more interesting when all is said and done, is because it's like, wow, we really have identified a flow that's that strong that like when we get some of the strongest fundamentals and everything else that you could possibly think of, and you would think that that would just create insane flows short, you actually get something that ends up being even stronger long, right? That's a great case study for everything that we've been saying about market inefficiency, right? Because not only that, but it's a flow that based on positioning and everything, these quants like Miguel at Nomura are 100% able to predict. So that's really cool, right? Wednesday was telling, yeah, well, Wednesday was just what the heck, dude. That the 20-year auction on Wednesday was like, here's the thing, is that I think what happened was those buyers were there the whole time, and then just before the auction, it turned into, okay, we can't hold it in anymore. We just have to buy it. Yeah, and then there was all the stops on top of that. Yeah, I mean, look at it. It's kind of doing the same thing, isn't it? It's like it's ranging around down here on the bottom, but then when they get up to the top, you kind of get these tells that like, oh, they really are buying, even though that was like the head fake. That was like the stack the big order there and then not actually break out, right? But mm, we'll see how it plays out. Of course, I'm maybe trying to predict the future a little bit too much here, but I think there's a really good chance that we come all the way back down to the bottom of the range at 24, and but then ultimately in the longer run, um, push significantly higher. And if we're right, it's super interesting. And it is an edge that I think we have a pretty good edge on there. I'm just not so sure about it on a Friday. That's all. That was why yesterday when it was kind of working for me, I was like, yeah, let's be degenerate and put lots of risk on it and everything. So I was like, well, if I really have something, I should try and really take advantage of it. Yeah, there's another excursion down. See, I really think the buyers are out there. They're just really sneaky. They're just taking teeny tiny little bits of contracts at a time. So every time that we see it tick around, it's just like, oh, it was only like 500. Yeah, kind of makes it hard to make any kind of conclusion from the market data though that we're getting, doesn't it? In this case, you know, I was saying I think we want to come back to the bottom of the range. So we're close to the bottom of the range. I actually think you want to see the bottom of the range fall out first. We'll see. The way that it's kind of doing this kind of makes me think that the bottom could fall out, or they could just do the exact opposite of what they did at the top, right? Hmm, maybe not. There's a little bit more volume trading there at 24 and 23. Okay, they trade down 23 half, it goes through it. They trade 23, it goes through it. Hmm. 2.37 was where we was at yesterday. Do see some pretty when I kind of come and look at like the order flow overall. It's kind of mixed. The 30 year is definitely mixed. The 10 year, it had some buying and only just now on this recent downturn has it turned into selling. But the 5 year, they've been pretty consistently selling. You can see how aggressive it's been in the 5 year there, right? In other words, flattening. Okay. So they're taking 23, but it's not really reacting to that very much, even though they just ticked a new low at 22 half, and that's not really reacting at all. Okay. There's a little bit more of something. Let's reset things so that it's easier for us to see the 5 year here. Russian Defense Ministry says army does not rule out possibility of storming blockaded Ukrainian cities. Okay, yeah, like you've already been attacking cities anyways. Man, listening to the things the Russians say is like, what the? They really think that anybody's going to buy this stuff? Okay, do you mind explaining time, price, opportunity? I'm using Art Trader Pro and I see volume profile of sorts with A's, B's, and C's on some prices. Okay, sure. So when you look at your typical profile, we're usually looking at volume profiles, which is, the volume traded by price. Um, but before we had volume profiles and we really had the data and the software to do that sort of a thing, traders would create a profile by time instead. So basically, what you're seeing is how much time it's spent at that individual price. So if it was in that price during that 30-minute time period, then there's a square there, essentially, is the way that it works. Okay. And the A, B's, C, D's is basically just which time period it was. So the first time period will be A and the second time period will be B. And that's how they're able to sort it out because they want to look at it and they say, okay, we had a double distribution. There was a distribution up here and there was a distribution down here. But which one was first? So I want to look for the A's, right? And that's the gist of what they're looking at with the TPO. Now, this was really originally popularized by James Dalton in the book Mind Over Markets, which was published in the 80s. And what has happened is that a lot of retail traders, probably most prominently now in our time, Future Trader 71, have kind of taken his ideas and tried to translate them over to volume profile. And the way that they do that is they look at the peculiarities and categorizations that Dalton made, and then they try and test them on the market to find statistical outlays with them. So like there'll be the point of control and there'll be the value area outside of that. And then they'll say something like, if we open outside of the previous day's value area, what is the percentage chance that we will visit the previous day's point of control, for instance, is what they'll do. Now, there's some fallacies with statistics like that. You're not going to have a very big sample size, and you're not going to be able to see the tails. And it doesn't tell you how much excursion you're going to have against you, which is the really big problem. And that's when I backtest those, that's when it kind of tends to not work, is that if you just say, okay, when this situation happens, we're outside of the range, I'm going to buy on the open and I'm going to sell when it touches the previous day's point of control. When you do that, it doesn't work, because the days that it doesn't work, it's like you lose so much that, right? So, and you try to do it the opposite way, you don't really make money either. This is my recollection. But that's basically the gist of what we're looking at. So, how can you kind of use this, or how do I try and look at it? Well, so first of all, I do think that there is something to like day types, right? And there is something to that these distributions get created in a random market. You wouldn't see these distributions. So why do these distributions occur? And we know that these distributions occur because of liquidity holes, right? And the moves, the pushes, or what they would call, what do they call, what do they call it? I don't remember. They think that it's just like somebody coming in and saying, oh, I'm going to trade this. Let's trade it and see if they go to a new high. And then sometimes they just happen to be successful and then value is accepted and that sort of a thing. But really, it's a large meta order that could be executed for any one of thousands of reasons, right? Have a large meta order, goes up based, if there's an opposing meta order going the other way, they're going to come back. And if there's not, then they're going to tend to just rebalance at that new level where the liquidity hole happens, right? So we can kind of use that to some extent. And we can try and use those liquidity holes to try and position ourselves. Right now in the Treasury, if we do want to take a long, I think that we did a pretty good job here calling that they were going to bust the lower end of the range. So now I kind of have to sit here and look at it and say, am I getting a liquidity hole here? And am I getting an opposing meta order? I'm not seeing very much support for an opposing meta order. Maybe a little bit of a liquidity hole at 22, but I'm actually kind of, from the way that the flow is going through right now, I don't think I'm getting very much support for my theory on long, am I? So I'm kind of sitting on the sideline. Well, okay, now that right there is to the point where there's no way I'm going to try and take it long now after that, right? That might be exactly where it flips around, but that was pretty slippery movement down to the downside. Now, in fact, maybe I should, I don't know. What should we do with our long in the Treasury? Do you want to just give up on it, or should we try and market make it back out? Because we could try and market make it back out. That might be fun. Because I only have 2 contracts. What is SVC host? That is a Windows system process. Don't touch it. My laptop is acting weird. It's taking longer to show the desktop bar on the startup, and the antivirus it doesn't analyze. Plus, it cannot install anything, and it kept it on my backpack, and it heated up beforehand. Okay, so it sounds to me like you may have a piece of hardware go bad. That's not good. Well, it's not a disaster, because what could happen is, like, let's say it's a USB port. Maybe a USB port goes bad because it heated up too much and, like, the connection on it kind of got loose. That connection kind of coming on and off can like take a lot of processing power because the processor is trying to sort it out, right? And theoretically, you can just go into the device manager and find the particular piece of hardware that's acting up and just disable it if it's not a necessary piece of hardware, right? But doing that is a little bit beyond my ability. I would just come in and, like, start enabling and disabling things, but I think that there are some utilities that can kind of try to give you an idea of what's going bad. You could also try pulling up the Windows log, and that might give you some, you might see some log messages in there that give you an idea what thing is causing the problems. But you say you kept it on in your backpack and it heated up. That could, if it really heated up too much, that could. Although if you weren't actively using it, you would think that it would be really hard for it to get too hot. But if, like, the fan was on and everything, like, if you close the lid, it usually goes into more of a hibernation mode. But if it didn't, then it was running a game and the fan was on the whole time and the backpack just got hot, and maybe you could get to a melting point. But then then your computer would probably detect the heat and throttle itself. So I don't know if that's what actually did it. And another excursion down. I wonder, did Uzi take a trade when it broke out there? Did you take a trade? That was a pretty clean break on all accounts. Nope, didn't take a trade. What's a Windows log? So if you come in here, what is it called? Forget what it's called. Hold on. Oh, it's called the event viewer. That's right. event viewer. So you'd come over here to event viewer. Does look like maybe it's going to turn here, but I don't know if I want to try and take that as a reversal, man. And then you can come in here. You can look at like Windows logs system. Probably it'd be under here under system. And then there will just be a ton of log messages in there. Well, I'm not getting any there on that one. Well, oh wait, what did it just show me there? Application form system. It's saying that I should be able to look at system. Oh, there we go. Okay, I just needed to be more patient. Now you can see them like it's giving me information ones. So what you'll probably see though is you'll probably see errors. Oh, see, there's an error. Shadow copies of volume C were aborted because the shadow copy storage could not grow due to a user imposed limit. Oh, okay. That's a good thing for me to know. I should probably change that. Anyways, so try that. Got to drop early today? Hey, no problem. Well, tell you what, if I had gone short, I'd be super, super pissed right now, right? I don't really see much reason for the move here. Let's see here. I posted a paper, that paper on the depth of inversion. Same conclusions. Small enough inversions do not signal a recession. All told, front-end treasuries seem closer to the last leg of the sell-off that has been rippling through the markets for a few months now. Not sure it's last leg, but it seems there's a consensus for a pause. You say wait for a 16 test? Oh, sure. Yeah. Well, there's a big old fatty order in the 10-year showing up at 16. So that order that was up there at the top and was really holding, I mean, that might have just been an algorithm getting kind of like overly excited, but that might have been spoofing trying to convince people to buy. So how do we sort? Have you guys watched my video on large orders? Right? How would you sort that one out? Well, I see a large order like that. Like a big bid shows up after a kind of an impulsive move up, but it's Friday, or maybe it's later in the session. I'm a little skeptical about it, right? Because I just know, like, what reason would they have to be placing a big order like that they're that desperate to do it and they're just going to show it, right? Because you don't do as much business on Friday, especially like a Michigan Sentiment Friday. Order appears, do people front run it hitting the offer? Well, yeah, that's another good point, is that the order appeared and it didn't actually trigger very much volume hitting into the offer, did it? I kind of think that any kind of shorts that were out there hit into that, were getting out on that sweep up, and then there was nobody left. Do people front run it hitting the offer? Nobody's saying no. Yeah. But I mean, if you wait for people to hit it and then it goes up and then you've kind of missed a chance, right? So I think it really helps to think about the context in which it's showing up and asking yourself, why would a institution be executing a large meta order right now? Because on a Friday, I mean, maybe they have some rebalancing to do and stuff, but I don't think they like to do that on Friday. You think they're going to punch it and go further? Well, I've been waiting for liquidity to happen in a certain spot to try and market make out my loss. And it's not happening, is it? Okay. Oh, ew. Okay. Well, the guy at 16 was real and he got out. That might have been profit taking. Certainly looks like it. Yeah. Well, what you're probably going to see at the very least is an excursion down here and then snap back to 16. So I'm going to start doing it here. Feels a little intense. It's a little intense. I still don't see any signs that there's like direct news behind this move. It could just be traders going to trade. Too many people got in on the kind of the long trade that we were talking about yesterday. Yeah, obvious. Well, neither did I, but when I was coming in and I was saying it was an inside day, I wasn't necessarily trying to say that like there's not going to be any movement today, just that my ability to predict that movement might be less, right? It's curious timing too, right? Like it started at the top of the hour. Does that maybe mean that somebody's gonna come in and buy E-minis really hard? I don't know if that makes sense. Yeah, or you would have tried to trade it. But at what point would you have tried to trade it? At what point would you have tried to go short the Treasury? On the break of the low at 22? Like if we were doing the 10-year break of the low at 22 maybe? Maybe a little lower than that. It's actually really surprising to me that the VWAP is at 122.21. Huh. 24? Oh, really? 24. Mm, but doesn't that, if you're doing it at 24, doesn't that kind of give you the risk of like, if it stays here in the thing, you're going to try going long here and short here and fail a bunch of times? I see what you're saying though. There was quite a bit of volume that traded at 13.5. So that concerns me a little bit. Okay. You'd only try it maybe once or twice. Well, there's 12. Still going. Shoot. I really wonder, what is this? Did I miss a piece of news or something? Russia's talking. Not, It looks like my attempt at market making here has failed. Did you see how they just slammed through 12 there too? Well, this has just very quickly gone through like any kind of metric that I can possibly put out on how far it's going to go. I mean that is a new weekly low. Like 12 was the weekly low in the 10-year. What the heck? What about the 30? Okay, the 30 is not to a weekly low yet. 30 would be at a weekly low at 147.21. What about the spread? What did the spread do? The spread, well, the 2s and 10s. Oh, interesting. Okay, the 2s and 10s widened considerably. So when we're looking at the 5 through 30 end of the curve, that's still getting flatter, but the 2s and 10s apparently is getting steeper. Okay, well, at 5,000, I think that I have to puke this, right? Okay, so we are getting a meta order the other way now. Two-year maybe above 2.25. I can't. I should go pull my indicator on the 2-year chart to tell us what the correct interest rate is over in here. It's this end or this end. It's probably this end though. Hmm. So in this case, let's try going with the quarters and just try and get it all off at 16 if we're so lucky. Everyone on the bid is just taking profits. Yeah, but did you see those guys smacking back? I mean, some of that might, but it might have been profit taking too. Some of the buys back up were a little impulsive. I really hate it when we get a strong trend and I don't see it coming. You notice that really bothers me. It doesn't always have to be off of news, but like, man, that was crazy. That was like the whole range for the week in 20 minutes for no apparent reason. How does that happen? What happened there? There's not news to push that? That's so weird. So weird. Russian Defense Ministry is still talking. I don't know. Maybe it had something to do with that. I think it's safe to say that none of us saw that coming. Yeah, you're probably right. Okay, well, let's come to financial Jews. Let's just see what are their needs to know market risk. China's President Xi in a phone call with UK Prime Minister Johnson. China is willing to play a constructive role to encourage Ukraine and Russia to have peace talks. The Kremlin says the Russian military will make recommendations to Putin on how to best respond to NATO's strengthening on its eastern flank. President Biden of the United States stated we're working together to reduce Europe's reliance on Russian energy. German economy minister Habeck, we have reduced Russian oil imports to 25%. United States and the European Union have reached an agreement on energy supply to cut dependence on Russia. Yeah, and then you just don't see any real headlines going back. The only thing that's been happening since this started has been Russia is speaking. We do have a consumer sentiment number at the top of the hour. The S&P 500 here opening now, looking a little bearish, actually. That is just, well, I'm glad that I said, no, I'm not going to touch it. I think on this move, this from here, well, actually, where can we go back? This was probably the first and second movements of it. They might have sped it up because it got so crazy. But that kind of means that a lot of the opportunity is passed. We'll probably see some once they find a big enough liquidity hole that the orders, it kind of stabilizes. You might see some really big pullbacks. We already saw a pretty deep pullback back to 12, right? It's still possible that we get back to 16. What was your question about T yields yesterday? I don't know. So, we did have one question that we had been asking all week kind of answered, because Goldman Sachs came out and put their yield forecast out, and their forecast was 2.6 by the end of the year, which is only 20 basis points away. Especially after that move. That was just crazy. I mean, we went from 47 to 42, 37 to 42. So 5 basis points. Guess it's not crazy because we've seen larger than that recently, but let's come over to Zero Hedge and see if Zero Hedge has anything on here. No, I don't really see anything. I do see the surge in bond. Let's see here. This surge in bond yield says it's time to buy bonds. The surge in bond yield suggests that we are nearing the ideal entry point to buy longer duration bonds for capital appreciation and portfolio protection. Such isn't the first time we've made this call. In December 2018, we wrote why Jeff Gundlach was likely incorrect about bond yields topping 6%. Here's the conclusion of the article. Blah, 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 blah. This looks like they're making a more of an economic argument. So I don't know if this is too relevant to what we're seeing at the moment. But I'll put that, save that and read that later. Well, I sure am glad that when we were at the top here, remember I was saying, okay, is the order flow in line with our theory that we're going to get a buy here? It really wasn't, right? And then it went lower. We probably could have justified flipping around and going short at that point, but this is so, there's no way that I thought it was going to come down to here. That is just so wild. Now I'm hearing it. Economists at Citigroup now see a monster round of Fed hikes this year. We now expect the Fed to raise rates 275 basis points, up from 200 basis points in 2022, with 50 basis point hikes in May, June, July, and September. Whoa. Whoa. Okay. Okay. That's so before earlier in the week we were kind of having these moves down because they said they're going to do 250 basis point hikes in a row, and now Citigroup is saying that they're going to do 450 basis point hikes in a row and a 25 basis point hike in October and December, putting us to 2.75 to 3% at the end of 2022. That is way more aggressive than the estimates that Goldman was putting out yesterday. Oh yeah, we have to puke this, by the way. Good thing it was only Sim. Whew. Okay. You're deep in the money short. Good. I was kind of sitting here thinking, well, I should take a long, but I don't want to chase it. Well, that kind of sucks because that means there was, if I had known that 30 minutes ago, I totally would have just gone short and we could have been up probably 30, 40 bucks by now. Man, so that was like almost $40,000 short off of that in the 5-year. That's really wild. Look at the spread they're forcing you to take in the 5-year micros. Good grief. Maybe they should just change the micros to be a basis point instead of a tenth of a basis point. Good grief. 30. Guys. I'm so terrified to try and hit in on this without a pullback, but this might not give you a pullback. How much further can this go today? I don't know, man. This is on par with some of the largest imbalances I've ever seen. So it's really impossible for me to determine where it's going to turn around or how much more could go short or any of that. I think let's see what's Alligator saying here. Listening to some Euro economists this morning, they think U.S. inflation is out of control. First time they speak out about necessity of Volcker type action. This would be Volcker type action. It really is. Okay, so this is a big trade there at 02. We're kind of also, I should note that we're kind of beyond the square root impact sort of a thing, right? This is that case where there's so much volume that it just completely breaks down. Jeez, look at that. I have never seen flow like this, guys. This is a little terrifying. God, what? What the fuck? This is terrifying. Well, like they'll come down to a spot. You'll see a little bit of volume trade, and then they just went another. They just went another 23 ticks down. This is. I've never seen anything like this, man. I've never seen anything even close to this. I'm kind of feeling at the moment that it's probably better for me to just kind of sit on the sidelines a little bit and let things calm down because uh I don't know if I have a whole lot of edge here now. I really could have much earlier. I wish that I knew what was going on earlier, but now at this point it's just going to be a zoo, right? Like somebody literally came in and sold like insane amounts. Am I seeing so every time that I come in I look at my 2 and 10. My 2 and 10 spread, it doesn't seem right. Two-year note versus 10-year note is 2 to 1. Because it always seems to me like the 2 and 10 is doing the opposite of what the rest of them are doing. Front leg ZT2, back leg ZN1. Well, pulling back. I guess all of those guys that have to buy treasuries before the end of the month could use this as a great opportunity to to 45. So now that's 8 basis point rise. GameStop still up today? GameStop could be wild next week. If closing the week positive, that could continue maybe a little bit. I don't think that that's set up necessarily to have the like the full on short squeeze sort of a thing again, but I think that it could pick up more public interest next week. Parabolic daily stuff. That I hesitate to make a call like this, but that was probably the full stop out down at the bottom. Like that might have been the degree of that move. It's a 16 tick pullback. That is just so crazy. I think Citi's call seems crazy to me. Don't you think? I I really don't think that the Federal Reserve wants to go to 3%. It's certainly much more aggressive than anything that the committee themselves are saying at the moment. Joe Manchin will support KBJ. Hmm. I don't think that KBJ has performed very well during the hearings. Like, if Republicans were looking for a reason to filibuster her and not put her in, she has probably given him the best uh, scenario for that to happen. But even with after all of that, it's probably unlikely. Probably she does get confirmed. But there is a remote possibility that Republicans filibuster that and it causes a lot of drama. So you might want to keep up on that. Okay, so O2 is the place, huh? Let's see if anybody on Twitter is talking about this move. I don't really see much. Nobody tweets about the 10-year. No, there's actually not too much talk over in Treasury land. Okay, now let's come back and look at our correlations. Okay, so gold definitely got killed there on that move. The 6J got slaughtered there. So the Japanese yen is facing some problems here now with that big move down because the Bank of Japan hasn't stepped in to hold the currency up or anything, and I think they're kind of stuck in a hard place. Japan is in particular. The dollar hasn't really moved all that much here for us. I mean, it's moved, but nothing crazy. The E-mini has been on a downturn this whole time, but they're actually recovering it at the moment and recovering it quite well. So it does look like the bond market is pretty. It's just the bond market making this move, essentially, just moving by itself. Which, given the piece of news that we had, I guess makes sense. Well, does look like it may have exhausted itself. Hmm. Thing is that there's probably, I mean, this whole move probably doesn't have a whole lot of liquidity behind it now. So how far it could bounce back up could be really frightening. You caught some of it? I was too scared, wasn't I? Remember when we were saying, well, let's watch 16, right? I don't think that I really found out what was going on until we were around 08. 04. 04 seems to be another spot. I have never seen an analyst call have that kind of effect on the market. Certainly not a call by Citi. But I've also never seen an analyst call in the Treasury market that was that aggressive and out of line with the current estimates, you know? Yeah, trade at the start of market action has to be very quick. Oh, we just weren't informed that time, right? I mean, that was an informed trade and we just weren't informed. I think that we were informed quite late. That Twitter and Financial Juice failed us. I still haven't heard anything from Financial Juice about it, right? Was Alligator was the one that told us. Well, does Zero Hedge have anything about it out there now? Oh, there you go. Treasury yields are soaring higher this morning, seemingly triggered by a hawkish note by Citi economists calling for an even more aggressive Fed this year than the market is pricing for. In a note published by Citigroup's Andrew Hollenhorst, the bank said that it now sees 2.75% of hikes, including 4 straight half-point moves amid persistent inflation. In addition, we expect the Fed to continue hiking into 2023 and sending the benchmark rate to a range of 3.5 to 3.75, analysts led by Andrew Hollenhorst said in a research note Friday. What? I'm not going to read his note here. The short end, as one would expect, is getting hit the hardest, but the entire curve is bear flattening. The 2-year is up 10 basis points, 30-year up 4 basis points. So let's try and make a chart here, because I just do not trust my spread thing here. Like I don't think that I have the ratio correct. Just doesn't seem right. 10-year. Okay. Put it up here. 10-year. Let's just change it for these ones. It's probably best to just do a one ticker and on close sort of a thing. Line on close, apply. That's a little better. And 2 YR. Y here, one ticker with line on close, lie. Okay. Oh yeah, those were, no wait, why is it showing me? Oh, that was yesterday. That was yesterday. Oh, there haven't been very many trades over here, apparently. It does look like it is steepening. The 2-year went further than the 10-year. I don't know. Oh no, wait, that would be flattening, wouldn't it? That would be flattening. So why does my spread say that it steepens. Why is it the opposite of all these other ones? Don't understand. CT ZN 2 1. Maybe that spread is just goes the opposite way for some reason. I don't know what to do with that. How hard to catch highs and lows? Really hard. We did have a spot there when I was yapping around that we could have tried to take it long, but sorry, we could have tried taking the yields long, but still a little scared. Okay, meanwhile, as rate hike expectations surge, the market is now pricing in more than 8 further 25 basis point hikes this year. The subsequent rate cut expectations are also rising for 2023-24. Crypto is rallying here as gold fades and stocks tumble at the cash open. Yeah, but crypto is rallying. Although that's just been a rally all day. So this, this move would probably be a good short for Bitcoin, but Bitcoin never moves the way that it should. 5 and the 10-year are not only inverted, but very inverted. Look at that. Look at that, man. Right? The 5-year is now 2.5. Jeez. I cannot sort out why it does this. Front month minus back month. Front month times 2 minus the front month times 1. I don't know, guys. I kind of think the Citi analyst is wrong. What do you guys think? Let's do a poll. Year-end funds rate. Below 2.25. 2.25 to 3. No. We got how I wanted to try and make it fair. Below 2.25, above. No, let's not do it that way. Let's do 2 to 2.25, 2.25 to 2.5, 2.5 to 2.75 or above. Let's do that. Because the consensus forecast is basically 2.25 to 2.5, right? This is a tough question with all the recession talk out there, right? It's exactly the case. No, I don't want to turn on filter keys. No. I'm trying to figure out what to call today's. Hmm, 122 even. Well, at least one of you think that Citi's call isn't too crazy. I was thinking about taking it short up in here and I didn't do it. Really sucks to miss out on such a massive move, but I do kind of wonder if the market might push back considerably on this. I think it would be really hard to find a meta order that is as large as that, though, to push back. But I wouldn't be surprised with the liquidity conditions to see them come back up to 122.08 or even 122.16 at some point. But and my little attempt at on the sim account of adding onto it and everything obviously didn't work. I needed to wait a lot longer, but because I wasn't informed, there was no way I was going to make that decision correctly, right? Could easily see a meltdown next week. Yeah. I was saying I want to take the week off, but I don't think so. I really want to see what happens, even if I don't directly trade it, because that was just insane. What we might see is we might see pushback against the call early next week, but to see pushback against the call today would be really hard. And here's another thing. Like the double hikes, you're gonna have to have a CPI in April that is just absolutely dismal, right? You're gonna have to have CPIs in April and May that are just absolutely dismal to really get like 4 double hikes in a row. That just seems really crazy because right now, Bullard and Mester are the ones that are like, well, yeah, we should probably front load it. So that is where we get like probably at this point, I think that it's more likely than not that they raise 50 basis points in May. Okay. After that, it's all kind of questionable. June, maybe 50-50 as well. Right. At that point. But then to have it in the 2 after that, that is just so far beyond what anybody on the Federal Reserve is saying right now. Like, it's really quite a zany call. And I mean, the market reacted to it like insane. I'm sure there must be some other positioning dynamics and so forth that kind of helped lead to that because, remember that it was at the beginning of the week when people were starting to call for double 50 basis point hikes that we saw kind of a meltdown. And this was like that and then 50% more, right? Wait, well, let's come back to the volume chart. Here is ZN. Yeah. So on the 22nd on Monday, remember we had this move right here. And then that kind of continued. That move, like there was a retrace. So let's measure them, shall we? Make sure that what I'm saying is entirely accurate. A ruler. From there to there. That was well, that's not quite right. Hold on a second. Properties. Display unit ticks. Okay. Okay, that was a 90 tick move. Oh, maybe this one is not as much. So if we go to the top of this one. Ticks. Let me just save that as default. Okay, 70. So it was almost as far, actually, but not quite as far. Well, the move on Monday, though, like the thing that's interesting about that, actually, is that the move on Monday was actually this, right? It was 50 ticks. After, well, let's start from here. Let's start from here, okay? So that was like negative 36 ticks, like just the initial move. It went further going further on into the day. This one was 65. So the actual like decline was twice as big. Wow, what the fetch, right? That's crazy. That's crazy. That's crazy. But what do we do here? Well, it kind of looks like that balance might be somewhere between 122 and 122.04. Okay. Trade it or leave it? Eh, let's just kind of watch it. I I would say, even though I wish had taken the short and everything, by the time that I think it really would have been appropriate for me to take risk on that kind of a trade, it was probably too volatile for me to really be touching it. Sometimes it really is like, um, check your coefficients. Maybe they should be backwards. I don't know. Hmm. Let's see here. 5 to, let's come and change some of our coefficients here. CBZF is 4 to 1. ZN, the 10-year to the T-bond, no. Got a Fed speaker at the moment. Oh, you know what? I know what we can do. Dun, 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 dun. Days. We're going to do this a day chart. We're going to do like the past 2 years. Yeah. Okay. And then I'm going to go in and I'm going to add my toy. Where's my toy? Where did I put it? Oh, I put it in free. Okay. It doesn't work. That sucks. Feds Williams is speaking. Pushing them down again a little bit. Oh, because we need to do it. It's not June, it's 03. Of course. 03/22. You like that chart that I've got there? Hold on a second. There we go. There we go. So now what I can do is I can say, when we were here, for instance, sure. How has the yield curve changed? Right? So this is, oh, that can't be right though. 1.928. Oh yeah, it's almost 2. Yeah. 30 years. Oh no, the 30 years, well, they should all be over 2. What's with that? What's with that? They should all be over 2. Seems like there's something wrong with my thing because when I come into here, these should all be over 2. Right? These should all be over 2. So I don't know what's with that. I might have the wrong expiry on there or something. Well, I don't want to mess with it now because we're kind of coming down onto these lows again. Octavius, what did you miss? Everything, dude. Oh my gosh. Citi put out a note saying that they think that the Federal Reserve is going to raise interest rates 50 basis points in the next 4 meetings each time. And that the end of the year range will be more like 2.75 to almost, or sorry, 2.75 to almost 3%. And that they'll keep it going even next year. So they've made an incredibly, insanely hawkish call by Citigroup, and the bottom of the market just completely fell out. Like, I've never seen order flow like that. Like that move that we saw on Monday, that was pretty strong, right? The move on Monday ended up moving more in direction by the end of the day, but the initial move that we saw here was almost twice as extreme. So yeah, it's zany. No, I didn't take any of it. I was sitting here thinking, actually, on the sim over here, I had along thinking, they'll range here a little bit, like wherever we were like, they're going to range here. They went up to the high, and there was kind of like a spoof of sorts. And then it came down and it broke that low. And then it broke it again. And then it just started getting crazy. So I'm like, what's going on? By the time I had found out that it was the Citigroup note, we were like already down here or something like that. And then I was like, well, I don't know how far this can go. So I've kind of just been sitting here looking at it terrified. You think putting a naked ES and ZN chart horizontally under the ladders will be easier for new watchers to follow? Yeah, probably. This I mean, I have to keep these ones over here because those are the ones that I actually trade, right? But so there's not really room unless I want to switch this out, but I very much prefer this. It's a chart. It's pretty good. Vista chart should be good enough for you, you ungrateful little brats. Youngins always coming in here with your fancy old school charts. Well, I did kind of want that price. It was already kind of moving away from me when I posted that order, but I only put that in there to maybe if it came in for the queue, but it's not going. See, now the news squawks are picking up on it like almost an hour later. Lol. Lol. So if Citi thinks that the yield is going to go to 3 by the end of the year, essentially, that means that this has like another 50 to 70 basis points to go, right? That's why it moved the way that it did. it's not that Citigroup is like such a widely followed analyst and has such a strong impact, right? It was the insanity of the call. Like, it's really like, what? It's definitely like, is definitely formed like a liquidity hole at 122 or roundabouts. Yeah, it doesn't matter that I wasn't in it. It doesn't. I mean, I really wish that I was. That's all, dude. If I had taken that, 37 to 47 essentially. That was $100, right? Each basis point is $10. 10 basis points times $10, $100. Alligator says, I don't know what to do at this point, is just balancing around target. I said, yeah, I was just going to grab a basis point to feel like I contributed or something. That's Williams. Fed needs to be clear that both balance sheet reduction and rising rates will affect financial conditions. How is our poll doing? Out of 8 of you, 5 of you believe that we will be 2.5 to 2.75 or above. So you are all coming along more with the Citigroup's analysis. Usually I would fade it by now, but I feel many players could be late and ready to take the risk / pay. You know, there was a lot of volume on this move. There was. I'm pretty sure that my 2 and 10 year chart, it's just inverted from the rest of them for some reason. Yeah, you would have to sell and close your eyes. It's totally what you would have had to have done, Octavius. Like, that's the thing, is like, you're so like just okay. In my defense, and this is where I'm coming back and I'm saying, like, guys, I like what I'm doing. I think I'm good at this, but trying to make money off of it is not really very realistic. Okay, because like normally I'm coming in here and I'm just looking to like, oh, maybe if we get 10 ticks, that's like really good. Like usually it's really hard for me to get a 10 tick winner on the 10 year, right? And then all of a sudden we had a 64 tick downturn out of nowhere for like literally no reason. At least from my perspective, no reason. We come in today. It's an inside day. It looks like at the moment they're just ranging to both sides of the range. Comes down to the bottom, it kind of falls out. Maybe that's a false breakout. And then it just keeps going. So you get a decent amount of trend going on it now. Okay, so if you got a decent amount of trend, how far is it going to go? Because that's now all of a sudden it's a pretty decent move. And then we said, like Uzi was looking at quarters, it was saying like, well, maybe 16. 16 might be an interesting target. Let's see what they do. And then they just plow through that. And you're like, what the hell is going down on at that point? Now we're looking for the piece of news or just trying to figure out what's going on. Then it's the Citigroup thing. So now I got the Citigroup thing. Now I know why. But now that you know why, like, do you want to take a trade? Where do you take it from? You know what I mean? Where do you take it from at that point? Like, how far is this going to go? Well, it's going to be mostly up to how many orders that come in. It does look like they've balanced around 122, so they're probably going to have to rotate around this. Is there a possibility of another leg lower? There absolutely is, because here's the thing. I don't know how many orders there are out there to be able to continue trading this and to continue selling it, but the call that Citi is making is so aggressive that you've basically got like another 50 basis points worth of short action to come in the treasuries if they're right. Like, it's totally bonkers. The degree of how far outside the margin this call is. I've never seen anything like it. So yeah, you really would have just had to have seen the momentum and gone short and closed your eyes. Or, you use some momentum triggers and things like that. But from like an informed perspective, nah, it didn't work out quite the way. If I had heard on the squawk as soon as it had come out and when it was like breaking the lows there and everything, then I totally could have gone long interest rates and just held it and made like $100 there. But that's not what happened, unfortunately. I still might take a trade in here somewhere. I'm kind of questioning myself if I really want to go short rates here, even if I'm only looking for 10 ticks. Maybe I want to wait for it to come down to this end of the range and try and buy it. But I don't know if we're really going to have like a real... Yeah. Well, but I'm kind of justifying having not taken a trade, really, is what I'm trying to say, right? No, they can't do that. I bet the Citi fixed income traders went short and made their bonuses for the year. They can't do that. So you have to think of the research outfits as completely separate entities from the banks that own them. Like, the bank owns them and stuff, but like there is a Chinese wall in between them, right? There's this buy side and sell side, right? Everything the traders that you're talking about, those are buy side traders, right? The hedge funds or whatever come in and ask them to execute trades for them, and they're buying, essentially, right? Whereas the analysts, those are like sell side. So they literally can't talk to each other. So the Citi traders can't have known about the report before it came out. If they did, it would be illegal, essentially. So they can't do that. They can't talk. They literally can't talk. Well, I mean, I guess they can talk to each other. Like you can see each other in the lobby and say hi and stuff, but they don't coordinate. It's illegal. Straight up illegal. Listen, I used to shoot the bull with Matt Hazius, once a week or so in the front lobby where I work. You know why they had him here in Salt Lake City? So that he can't talk to anybody. They literally house the analysts in an entire other city so that they don't have to deal with that problem because it's illegal. And they're very, very strict about it. So if you had any evidence that Citi Trader had gone short the treasuries before the report was released to the market, you could that would be SEC action right there. I don't think that people understand this. And I don't know the way that things were at Citi, but at Goldman, they took that stuff very, very seriously. I'm sure. I think that one thing that they would have is like, as soon as the report goes live, they would go and phone the traders to tell them about it. They would tell them first, but they can't, they can't coordinate. They can't say, hey, we're releasing this report tomorrow and it's going to say this. No, they have to get it at the same time as everybody else. It's like you post it live and then you go and you tell the Goldman traders first. Or, you'll hear it over the, I don't know what you call it. You have a little intercom over there. Well, it is. So what you're talking about, are you talking about the, no, I still haven't touched it, Uzi. I was kind of thinking about trying to fade the range, but I've thought better. Now I'm thinking maybe I could go long the range, but I don't know, man. Like when I think about it, like here's the thing, okay? I know that, or at least we know now. I would not necessarily have known before Monday, but today I know that when you get these analysts come out and make interest rate projections from the big banks, the market pays attention to it and trades off of it, and the liquidity is so light that it ends up creating these really strong moves, right? So I know that when an analyst report like that comes out, that you just go short the treasuries and what you get is what you get based on how much volume it comes through, right? Okay. I know that. Okay. So I wouldn't be fading it, but on the longer term play, the call that they're making seems crazy to me. It is so far beyond what any other analyst, and particularly what the Federal Reserve itself is saying. The Federal Reserve itself is saying, hey, well, we want to get back to neutral, right? They want to get to 2 to 2.25 is what the Federal Reserve wants to do. I have not yet heard anyone say that we're going to need to go further than that. They're saying that we will if we have to, but none of them have seen anything yet that suggests that they need to go further than that. What we've also seen is we've seen Feds Mester and Feds Bullard say that they would prefer to front load the hikes so that we'd get a 50 basis point hike in May, maybe a 50 basis point hike in June. And before today, the market was pricing that one as a 50-50. So for the Citigroup to come out and say, oh, no, they're not just going to do it in May and June, they're also going to do it in July and August, or September, I think. I don't think there's one in August. I think it's June, July, September. And they're going to continue going until they're basically to 3%. That is way out there, right? And I am not seeing in this market the conditions that make this necessary, to be honest with you. The Ukraine situation may cause more inflation. I think this inflation thing might be persistent, but I'm not expecting to see like big beat expectations on CPI every month and that sort of thing, because that's what would really have to happen to justify that, right? So when I come back and I think about it like that, I'm not really making a trade. I'm kind of have to trade against what I really think about the market, right? I really have to come in and say, well, I think that they're gonna, this is gonna keep going, and maybe I can get the range. But I don't think Citi is gonna be right. But who knows? Maybe all of the other analysts update their expectations again now. This is really just a crazy, crazy, crazy day. Yeah. Well, I can't come in and say, I mean, there's no, how would I have traded that other than trying to go along with the momentum. A younger me would have definitely have hit into it, right? But you can see Uzi, he likes he likes to take that sort of a trade. He didn't do it. He said he had to walk away. Yeah. And you know what? It wouldn't surprise me if we see like a really strong pushback on that next week. Like, I think you got to be thinking, I don't think that the Fed speakers that spoke today really. Oh, by the way, I never even paid attention to the consumer expectations. What did we get? Pending home sales was -4%. And Michigan expectations was 54.3, which was slightly under the expected 54.4. And conditions 67.2 versus 67.6. And 5-year inflation 3%, and 1-year inflation 5.4%, which was in line with expectations. So that news was all in line. Yeah, I don't know, man. So, but this is like another larger thing that I've been complaining about, though, right? Which is that one of the problems that we seem to have with the scalping is that because we're out most of the time, a lot of the time we just miss the best moves, right? Like, there's definitely more money in it just coming in and being short. But here in the treasuries, in order to do that, you've got to have a really big stop. Like, I was short on Wednesday, right? Could have held that. I could have just held on to it, and I would be up almost like $500 now if I just held on to that. But there's no way that I was going to take the $100 drawdown. So another thing seems really weird to me that they put that out on a Friday. Don't you think? Why would you put that out on a Friday? Isn't that a little sketchy? Hmm. Well, here's our opportunity we missed, isn't it? We could try just hitting into it as she goes. I'm interested. This kind of looks like it's gonna fall out. Oh, you know what? I screwed up. They're kind of playing this game where they're like, "Are we gonna go? Are we not gonna go? I don't know. Are we?" There's the absorption before the thing. If it had been earlier, I would take that one, but Not with the way that this is going. No, sir. Okay. Yields are sure going. At 30 years just getting creamed here. Man, stream is really sparse today. Am I that awful to watch? I missed it. I missed it, so they don't want to watch me anymore. Well, Seth, if you just sat by on a trade like that, then I don't want to watch you. Mm-hmm. I get it. I get it. I don't want to watch me either. I want to make I want to make $1,000 on that. Good grief. The dumb thing is that I was kind of doing like a nonsense, like not serious trade through it all too, right? Oh, Feds Williams is still speaking. Oh, yeah, I guess he started. Well, we still got some speakers today, though. Feds, Barkin, and Waller are still to come today. Uh, so is this the start of the housing bubble? No. One does kind of have to wonder what kind of chaos this is going to cause elsewhere, though, huh? So, there's been all of this trouble with the commodity houses. This sort of thing might, well, gosh, that's already not going very well. Look at the 5-year there. That's a little suspicious, though. Might go, but it's a little suspicious. Okay, well, that didn't go so well for us. Mm. This is just going, dude. Like, what the fuck? Well, that big order in the 5-year is way back there, but this is like just going for like another bender down. Um, I'd say it was a pretty bad week. I mean, I recovered quite a bit yesterday, but I just got slammed so hard on Wednesday. I just can't don't know what to do about it. Cuz on Wednesday, like here's the thing, on Wednesday I was like, let's just go short treasuries and just hold it. And then there was this insane move against it, and now I'm not going to hold that. So I kind of gave up on that idea, and I really should have done it, right? I really should have done it. Well, I would have to have picked a good spot, but obviously if I had been short today, I would have been super, super happy, right? That would have completely turned around my account. But instead, I just kind of sat here. I'm still kind of getting like really bad short-term picks too. I was Oh, no, that's just sim trade though, right? So here was the thing, Lucas, was that we were just messing around. I was like, well, I don't really think we're gonna do anything, but let's just take one here in the treasury and or in the ZN and like try and show some market making stuff. So when it broke out of the range, we were watching for kind of a liquidity hole in a spot where we could try and sort out a position and make it back or whatever. And then it just kept going and I puked it. So I looked super dumb doing it, but I didn't know what was going on at that point. So it was very hard to get access to an informational edge. Well, it's not just that. It's not so much that it's hard to get access to an informational edge. I think that any trader will find a situation where they have an informational edge. The problem is having an informational edge all the time. Right? I think I'm just tilting here now. It seems to me that we could still just go long interest rates here and hold it, and by the end of the year probably make money, right? It seems to me like with this new strategy, here's the idea is to have one or two edges like these on a year, and these are the trades that get you. Yeah, maybe. Um, I just think that my risk tolerance isn't high enough to be trading this kind of volatility, Lucas? I think that's really what it comes down to is just been so crazy, right? And this move is just so crazy. But you know what, man? If the Citi analysts are right, there's another 50 basis points of this. Like seriously. It just keeps I know. I've never seen anything like this, have you? I don't think that I can remember when after Donald Trump got elected and we had that day where the bonds fell down big time because they thought that he would be more fiscally responsible or whatever, right? You remember all of that, right? That was maybe on par with this, maybe. But like the thing that makes it so crazy, the degree of the move based on that kind of a headline, Well, I think that's the thing is that my feeling at the moment is that the Citi analysts are going to be wrong, right? I don't think that the market can handle that fast of a rise in interest rates. No. Especially when, I mean, things kind of seem constrained. But maybe the call that they're making is that the Federal Reserve is going to have to crash the economy in order to prevent inflation from going out of control because of all the, the deglobalization and stuff. That's a possibility. You can see here with the trade that I made there that they're not cooperating very much. Well, it's time for me to log off, so maybe on Monday we'll go short. I don't know. But today, not so hot for me. I'm tilted is what it is. I'm just tilted. I'm so tilted that the way that this week has gone. And it just makes me more and more, I don't want to stop trading, but it makes me want to stop scalping. It makes me want to just CTA, because if I just CTA'd and just been short all year, I'd be like the star right now, man. Like I'd have made so much money from doing it and shit. It's just really dumb. Those are problems with what we're trying to do. Like if you can't get at the front of the queue, then I think it really brings into question any kind of short-term trading. Really. Because otherwise your ability to predict what's going to happen like immediately afterwards is really, really hard. Okay, guys. Enough moping. I'll see you guys next week, at least on Monday. I might take some of the week off. I don't know exactly what the details are, but I'll be there on Monday, all right?